Good morning, good afternoon, ladies and gentlemen. If you're wondering why I said morning and afternoon, I don't know when I'm going to get this video out, so I thought I'd cover both. Hope everyone's off to a great start. This is welcome back to another pipeline trading video. Today I want to cover Bitcoin and ETH. There's a lot of buzz. We have SpaceX, and I just wanted to make sure that I get this out because I did say that we're closer to a bottom than most people think. But right now, the unfortunate news I have is that we are forming another bear flag on Bitcoin. So I want to go over key levels. You know, you can move it like this if you wanted. You could toy with it, have fun, learn it, see what like that looks comfortable to me right here. Right? You could even go like this if you wanted. There's plenty of ways to do it, but you get the gist of it. We're going to see how far it extends and what I want you to watch out for, because I don't want you to get wrecked. You know, remember the song? Blinded by the light, rig up like a douche until the middle of the night. You don't want that. You don't want to go down that path. So here's what I'd be watching if I were you. We saw how long and how big this bear flag can form. And again, this is still early, but the slope that we're doing, it could go like this. And, typically towards the bottom end, we start seeing these things get smaller and narrower. But I want to show you something very important. If I draw my line from here to here, where are you? Let's say it breaks quicker, right? Because we get a bigger run up. So I'm anticipating, remember, when we break a key level, what we usually do is retest, right? This was the floor around here, okay? This was the floor. And we broke up. This is the ceiling. We now broke the floor, and this becomes a ceiling. So typically, now we're going to go and see if we can break this level, which is 66,919, call it 67,000. I don't even know why I did that. So we're going to probably retest this area before making our next leg down, which should take us, again, this target's been in here from, I don't know, a while back. And it goes back, if anybody's watching this channel for the first time, we had our head and shoulder, right? And, this is why it's important. You can't just go off of one thing. If I were to just go off of the head and shoulder, that's great and all. It gives me an idea where it's going to go. But if you go back and watch my video, so we're going to put this to where the neckline broke, which is right here, okay? That's going to take us down to almost 50K. Okay? Which makes sense. This is what I've been saying for how long, folks? Go back, check it out, call me out, do whatever you're going to do. But this has been something I've been talking about for quite some day. I hope you're paying attention. I hope you're watching the videos. I hope I'm doing something positive for you, because that was the whole purpose of this, just to basically help people, educate them, show them price action, what to look for. There's so many different types of strategies, but one of the things is you're going to see when this breaks now. And listen, I should cover myself here properly. If we curl up 10 crosses at 20, price goes above 50, and we get above here, 81,000, this is invalid. Okay, so keep that in mind. Can we go up? Absolutely. We could go as high as this channel would like us to go. Now, remember, watch the moving averages, because the moving averages tell you the strength. If you look here, a lot of people that trade the strategy that I do may have potentially went long on this 20 but they would have got out here. Or a retail person who doesn't know their head from your you know what would hold this thinking this is it. This is the bottom and it's going to go. When they got over here, they're thinking they're a genius, right? Because look, the 10 crossed the 20, price is above the 50, but you're in a bear flag. And that's why it's important to know all of this technical analysis so you can see what structure is like and price action. Because if you rely just on one thing and one thing only, you typically will get wrecked because somebody not knowing head and shoulders and formation and structure would think that this is a very bullish move. And it was bullish, but a bullish move to a very near ending. And I shouldn't say that at the same time because it all depends on what you'd be happy with. This green candle that put us over above, if you would have bought on this support right here, that's a 17% return. So I'm not saying that you can't trade those zones. You absolutely could trade those zones. I've been trading those zones. But there are a lot of people that are buying in, risking everything that they have, hoping that this is going to moon and they're going to become a millionaire or something overnight. Everybody wants to make the quick buck. From my experience, when you go for the easy money, it typically doesn't work out well in the end. So don't take a shortcut. And it goes back to what I was saying yesterday about God's watching. Don't be greedy. Look at your strategy and get confirmation. So right now, I wanted to show Bitcoin is in another bear flag, which means at some point we will be making a lower low. Now, another thing to point out is typically I have this written down by my computer. I wish I could take it. Maybe I'll take a picture and show it. But I have the Bitcoin halving in April of 2028. And I wrote this last year. And I have the next bottom as in December of 2027. Do I know it's going to be December? No. But what's interesting is this could actually fake everybody out and take it to a level where it has people believing, right? It's almost like following the false messiah. You have people believing, and then boom, she comes down. And that's something to be careful. Like, it doesn't have to come down right where I am, but it just goes to show that's where the target would be. I would love if it would drop quicker and get beat and be done with, but it could go here, right? And then what can happen? You can get another sort of movement. Excuse me. And then I'm just drawing this in. I'm not a fortune teller, but it gives you a good idea of, how many different scenarios can play out, even if this is smaller, right? I'm just going really rogue here on drawing things out to show you where don't think for a second that something like this can play out, because it very well can and most likely will play out unless we go and break those highs I told you about. So it could do this. And then guess what happens here? This is what you want to watch for. Remember me, remember this channel, hit the like, subscribe, tell your grandmother, your mother, your friends, your sisters, your brothers, whoever it is that you have to tell. But watch this. We could come down over here, go up and down, up and down, up and down. Okay? And guess what this is? That's bullish, baby. That is what you want to see, because now you want to see this come down. Where's my little parallel channel? You want to see this. See how that even, I didn't even have to put this to draw these lines. How funny is that? It just happened to work out. These are not, I didn't do this like perfectly. And it still shows you, and it gives you a good example how that played out. So we hit a bottom. Everybody thinks it's going lower now, right? Keep this in mind. Everybody is schwitzing. They are freaking out. Okay. Their heart rate's up. They're like, oh my gosh, I'm going to lose everything. And then the unthinkable happens. Okay. Then we start. But this is an example, guys. You have bearish formation. Then you're going down and chopping downward. That's bullish. Doesn't mean you go buy in, but you wait for the confirmation, the moving averages, like I said. You want to break above the channel, get support, and boom, we're off. And then we start making new levels, new support, ceilings become floors, and we continue to go. Now, ETH, on the other hand, is doing something very different. ETH today is forming a bullish pattern. So I think I said this the other day, but we are getting, ETH has underperformed Bitcoin. And ETH is looking a little bit more attractive to me on a long. I have a long on for the record right now with BMNR. I'm looking to actually, I'll go through the chart, and I'll explain why I trade it anyway, just so you know. But like, if I were to draw this and put this wherever it's going to break, if it breaks there, see, here's what's funny about all of this, and it's good to know. Okay. It doesn't mean it always works 100%, but this is for anybody who says trading's gambling. Okay. If you place a bet at the casino and you're wrong, you lose. Okay. If I place a trade down here at this level based off of my technical analysis, stop loss here. Okay. So from here, 1605. So I'm going to risk, I'm just going to round, guys, $40 per share. Okay. My risk is $40 though. So if I have $10,000 divided by, what's it at right now? Just to give you, the ask is 16. Okay. 1677. That's five, call it 6 shares. 6 times 40. I'm risking $240. Okay. Now, watch this though. I'm risking that. But from here to here is 12, let's call it 13%. So I'm looking for a 13% gain. While risking 2.8. Okay. So remember that number. 13 divided by 2.48. That's a 5R multiple. So I'm making 5 times what I'm risking. So that's for anybody that thinks that it's gambling. Is there risk associated with this if you don't hedge yourself and protect yourself? Yep, absolutely. That's like going to any business blind, not looking at books, not seeing the financial health, not looking at the employees, watching. I could give you a whole list of risks in any type of business that have destroyed people. So it happens, right? It's the same thing. Treat this like a business, mitigate your risk, know where you could get in, know where you're going to get out, have your strategy. So my strategy on this is 817 on ETH is where I'm going to be looking for resistance. Okay. Now I could play a trailing stop. I could move my stop over here because, hey, who knows? Maybe, just maybe, the bottom for ETH is in. And the reason why I say that is, remember this channel that I had drawn in that goes all the way back to 2022? We got below it, and guess where we're going? Back above it, right? Now, the reason I'm not super comfortable just yet is I would like for it to come back down to 1713 and hold 1713 as support. So I would most likely just take my profit, not be greedy, be happy, and then wait to see on the pullback, do I have bullish confirmation? Did the moving averages cross? Because if it goes up here, it could just come up here 1826 and then just, it could be this. Let me draw this in for you. So these are the things that you have to be thinking about too, right? A lot of people overlook this part. It could be an A, B. We could go down here, C. So I told you where I anticipated the bottom to be close to on ETH. Okay. This is the low, which is 1413. Okay. And this channel right here, this diagonal line, is connecting all the lows back. I'm going to pull out a 2-day chart so you can see. And I'm going to get into some other things. See, this right here is bullish, and where I believe long term, this is what Tommy Lee's referring to. He's referring to it on network effect and how many people are adopting the network and growing the ecosystem. And considering the fact that if you look here, remember I said the ceiling becomes the floor and that's what you want to see? Well, that happened in 2018. The ceiling was 1404. Okay. Every time we got below, we went back, below, went back, went up, held it as support, had a run. The last one in 2024 to 2025, we broke down, touched it, went back up. So far, this has been proven to be a very critical level. Remember I said, you don't want to trade just technicals on itself. You want to trade levels. The institutions do not give a rip. I hear a lot of people say, oh, they're looking for your stop loss. Don't put your stop loss in. Yeah, I don't put a stop loss in also for my own personal reasons because I don't really want to get stopped out, because typically if I'm putting something here as an example, this trade off of one of these candles, and I put my stop loss here, right? This didn't get it, but sometimes you see a big wick down and it goes. And that's just for liquidity because they know certain levels. The levels is what they're looking for. So would they be comfortable in this level? Yeah, 100%, because of the amount of capital that they're deploying. So you want to know key levels on where you want to enter and where you want to get out. Now, this is more of a bigger play for me because I believe that I could squeeze probably a 2, 3, 4x out of it. And in the meantime, I'm going to be selling cover calls on the way up. And then as it goes up, if I do see something I don't like, I can also short, because I do have certain allocation of my portfolio that I am trading. This bigger chunk I'm referring to is more of the longer play. So that's why I said, depending upon what your thesis is, what you're doing, you could trade this to up here if you wanted, because I believe it's going to go back to this level potentially. I know I'm on the 3-day. I'm going to go to the daily so that you could see this more clean. I believe we're probably going to touch 1932 on ETH. And that's going to be a critical level. Why is it a critical level? Because that is where we had the Fibonacci extension. Okay, so there's two things that I did, which I'm going to zoom out, and I pulled this way over. I don't know why. Let me go to the weekly. Okay, So this is another thing that I'm mindful of. And I don't always think that I'm right. I don't go into anything believing I'm 100% right. That'd be very ignorant of me. And the market will punish you for it. Punish you. So here's what I'm looking at. We have this wedge. That you saw on the daily. What's interesting is if we break this wedge, it takes us, if you connect the high of 2018 to the high of 2021, it takes us to a measured move of about 24,729. Now, the thing is, we don't know when that's going to happen. So keep that in mind. It could happen in 2028, 2029, right? There's a very good possibility. So now we got to look and see where are we going to have the best entry. So that's the actual upside of it. Now, what I'm looking for here that is a little bit, if you zoom out and you connect these lines, it could take us down to 1,140. What's interesting is when I drew the fib level, okay, right here. So from this area, the low to the high, you can see the fib extensions. Okay. So this is where I am now thinking I have to watch price action, and it's going to be one of two. Either we're going to build bullish formation, get above this level, okay, and go, or we're going to chop up and then come down for a secondary retest, or this right here is going to fail. Okay. So you want to have your levels in play to know your worst case scenario. Do I think ETH is going to go down to $400? No. And if it did, that's a problem. That is scary. Even it going below 1,000, I'd be like, what the flip is going on? What broke? Something must have broke for it to go that low. Do I see 1,118? Yes, I do. Hold on one second. So I do see somewhere between where we are to the 0.786 fib level, but it all depends. Are we going to break this wedge that we've been keeping since 2022? My hunch is there's a very good possibility we can, because ETH got annihilated. Compared to anything else, we are now down 67.95%. So the other thing too is if you look at Elliott Wave, we could have a wave 1, this is wave 2, wave 3, wave 4, and then a wave 5. Okay, so that's what I'm watching. I believe that and this is again why I tell you, read books on it, learn it. It just gives you another bird's eye view on how markets move, structure, price action, and everything else tied into Fibonacci. And it's been a game changer for me to understand the market because, typically what you want to see is an impulsive move is a 5-wave move to the upside. We have not had a 5-wave move to the upside. Okay. And if I go over here, it might even show you a better example because this is wave 1, wave 2. Could this be wave 3, wave 4, and now wave 5? Yeah, absolutely. On the lower time frame, it could. So now we have to see, based off of the measured move, we hit the target, guys. ETH hit the target. Now we have to watch price action, and I have to say, maybe I'm wrong. If you think I'm wrong, leave a comment below. Tell me why. I'd love to get a different contrarian view on what I am doing or seeing. Because right now, if we break above, what is this? 1715. Okay. We are going to make a break above that diagonal line that's been holding since 2022. So remember 1712.5. That's what we need to break above and hold as support. How would we do that? I'm going to show you. Where are you? We want to break above here. And then we want to chop. Go to a new part. That's what you're going to want to see. Okay. Now we're going to get to this zone right up here, which is 20. See, like this is another good example. If we did this, right? This would be wave 1, 2, 3. This could go a little bit deeper. Wave 4, wave 5. Okay? Now I'm going to teach you something real quick. And this is just off the cuff, so take it with a grain of salt, but just to give you an understanding of what Elliott Wave is. So we have wave 1, wave 2. So just so you know, wave 2 cannot be 100% of wave 1. It's typically 60 to 80%. So this fair value gap would be a great wave 2. Okay? This wave 3 has to be the longest wave. Okay? Remember that. Wave 1 is an impulsive wave up. Wave 2 is a 60 to 80% retracement. And that is where, this is pretty fascinating. If I draw a fib level, okay, this is what Fibonacci is. This is a God-given mystery. How did that happen, guys? I just drew this in blindly, and you're seeing Fibonacci levels get hit. So that's what Fibonacci is, okay? You're going to get a retracement back to this zone. Now we're going to go for the biggest and strongest wave, which is wave 3. Then you're going to get another retracement. Now watch this again. Typically, the retracement should not be that deep. Okay? As we go up, they should be shallower in a bull market. How funny is that? Almost right to the point 1382. I just drew this in blindly live with you right now, and you're seeing how Fibonacci levels work. Okay? This is insane on how accurate it can be at times. And that's why you just need to learn it so that you can see where you are in structure in the move. Okay? So now, another important thing, this is wave 4. Okay? So I'm going to label this for you. We have our wave 1, 2, 3, 4, 5. Okay? Wave 4 cannot go below wave 1. So again, for illustration purposes and education, that would be invalid now. Wave 4 cannot go below wave 1. It could touch it, but it can't trade down here. If it starts trading in this range, this whole wave count is invalid. It'd have to be above here. Okay? Now, another thing is, just so you get this, see how sharp wave 2 is? Wave 4 is always opposite. So if this was a sharp decline down, wave 4 should be more longer without the same angle down. That's typically how it works. Okay? And then wave 5 is typically this length from here to here. So, and it doesn't mean it has to be 100% exact, but like I just drew this in freehand and you're seeing it. So that's typically what would play out. I hope you save this video, take screenshots so you understand it, label it yourself. But wave 4 can't go below wave 1. And you're learning this in real time, and I'm saving you thousands of hours of reading that I've done to learn it. And there's a whole bunch of wedges, and there's the A, B, C, D, E. This is just the very basic. That's why I would challenge you and encourage you to read books on it to understand it. It is more complex, but when you do understand it, you just see trading different. Now, after wave 5, what happens? You're going to get a B. Typically, this is very important to understand. B sometimes can come all the way up to wave 5. Now, why is that important? Because typically what happens in these events is everybody thinks you're going to all-time new highs. And now I'm showing you probably what might happen in this cycle. That's why I'm saying take a screenshot, save this, and see how it plays out and how it trades to it and make sense of it for yourself, right? Everybody learns things differently. Some are visual, some are auditory, but this is something that I think gives you a pretty good understanding, the basics of how this thing would work or play out, right? So now, what's very interesting is wave C typically retraces to the area of wave 4. Typically. Okay? And then what's funny is, remember what I was saying on where I expected it to go? So this is a Fibonacci level, right? The retracement level. It's gonna now have to hold this area over here as support to build new structure. If it fails, then we know that there's a very good chance, because remember, we are in a downtrend. Remember the whole saying I put in a video on my technical analysis guide? If you haven't watched it, watch it. It shows you all the basics and gives you the basic information and definition of what things are. I spent probably 2 months making it because there's so much detail and I had to try and see what would readers understand without saying too much, but not saying too little, because then I'm not doing you justice. And a lot of people don't want to watch an hour-long video, but it does tell you the basics and you read along, and there's no voiceover. But I could do it if that's a totally different story for a different time. But what you're seeing right here, and the way I drew this out on why it's important to understand this is a liquidity area where a lot of people would start to get very, very, very bullish. What's interesting is, if I were to extend this and look at where it goes, it would actually potentially go back and find resistance at the top of the bear flag. So that's where all of this stuff that I'm showing you is all correlated. So I hope this is making sense. I hope I'm explaining it properly, where I'm not, confusing you more than maybe you already are. Because then you're going to see, then there's this level that we need to break above for the bull market to be active. So this is where it becomes a situation, if I pull it back here on what you saw, right? I'm going to label it so that you could see this. We had our wave 1, 2, 3, 4, 5. And you had your wave 1. Oh, where are you? You had your wave 1, 2, 4, 5. That's it. Some people may even draw it. Like there's the problem with Elliott Wave where it's not like you can't go 100% is theoretically this looks like a better wave one. Right? You had your big impulsive move, 5 wave up, 3 wave down, A, B, C. There's wave one. Okay. Now, if I pull my fib level, it hit the 0.5, which is one of the most powerful levels, but it could have came down to 19. This is what I'm saying. You don't know where it's going to be exactly on the retracement. It could be one of 5 of these levels. And that's where price action and your moving averages are going to come in. Look, price broke below the 50. People probably freaked out at that level. And this is what a good fake out looks like if you don't understand this. Okay? This is a perfect example on what a great fake out looks like. This right here, super bearish. We came down. People potentially could be taking shorts, adding to shorts, freaking out. Where the market makers know exactly what level they want to get in based off of this candle too. A lot of buying power, volume up, right? You're seeing if this white thing, I don't know why this white thing's here with this gap thing. Hold on. Where's that? Oh, it's annoying. So you're seeing the volume on this didn't really go up that much. So that was the one clue that the market gave you on where this is a retracement and we want to see where support is. What did we do right after? We got above the moving averages. That's it. This right here, that's a bull flag. We went up, bull flag. We went up, bull flag. We went from here, this right here, bull flag, right? Went up here, bull flag. This right here would have got a lot of people by surprise. Because even for myself, this is again where you'd want to have a stop loss. If you're buying on this, this is where you start to see the moving average not acting like it should with confirmation. On this selling here, this is a red flag. Okay, this candle right here that you're seeing at the bottom where my mouse is, this volume bar is a huge red flag. Did you see a big volume bar here? No. Right? This is where price action and volume come hand in hand. Okay, so now you're seeing distribution at a high level. This is your double top. Now you're seeing distribution and selling pick up. You never saw the selling pick up over here, did you? Not one of these candles that was red has a massive bar that spiked up. That's how you know that you are now in distribution. The institutions are unloading their position to retail. And then once we got this nasty wick with this volume, to be honest, once we got up here, I would be like probably putting my short, not short, my, if I was bullish, I would probably be putting my stop loss at the 50-day moving average on a daily. Because the other thing too, and I know you're thinking, oh, Matt, this looks so simple. Of course, what idiot would ever buy up here? Well, I'll tell you what idiot. I could be one of those idiots at times because look, what's that? That's bullish. That is a bullish formation on technical analysis. And that's why you can't just use technical analysis because you would have got absolutely hammered. Now, how would you know that this is starting to be invalid? Very easy. It's not making new highs. The volume's picking up on the selling. It's the moving average. Moving averages, do they look as clean as this? Going up? No, they're chopping and crossing. You know what else does that too before a market crashes and a market takes a big dump? Same thing with the S&P. Look how smooth this is and beautiful, right? Like a baby's bum, smooth, comes down. This right here is the first warning. You saw volume pick up November of 25. What did it do? It gave everybody a little tease. Just the tip. Keeping it PG. And then what happened? Look at the moving average. Just chopped the whole way. Now, a lot of people that don't know this and a lot of retail would be thinking we're going to go to the moon. And at this time, a lot of people were saying Tesla's going to go to 700. I remember I was trading Tesla at that time. Okay. And what happened? We rolled over. Now, we didn't even roll that bad, but the point is you could have sold, covered your positions, you could have bought back into the market at a 9.5% discount. When would you have wanted to do that? Look, it's the same story. You had a bear flag, came down, chopped down, got your impulsive move, created a bull flag. And I, at this time, was concerned, if you remember, because it doesn't always play out. This is in retrospect, right? And the gap up above the 50 made me very uncomfortable. Why did I say that? Because we've gapped up before, faked everybody out, and continue to go to the downside. So I always keep my eye open. And then also, the other thing that I got played on really good was the fact that the straight, none of this stuff made sense. This is my first time trading the oil market the way it is. And I'm looking at history and past cycles, but you tell me from the drop that we had, 9.5%, what's changed in the Middle East? Because I don't know. And that is why fundamentals and all the crap that you hear and all this stuff, to me, is all bullshit. Pardon my French. This chart told you that none of it mattered once we crossed and this gave you a bullish signal. Now, right here, we're going to see, because a lot of people you're seeing on social media and the market are all concerned, right? You're going to see, are we going to come down here, build this bull flag, build structure? We do not want a sharp retracement. We want to come down somewhere here. We want to chop to one of these, okay? If we chop down to one of these and hold this support, we're good, okay? If we do this, on the other hand, like we should get an ABC, okay? We might even come all the way down to fill some of this gap and freak everybody out. I don't think that's going to happen just because, and like, unless something crazy happens in the Middle East, I don't see that playing out. But then what you'd want to see to the upside, where's my arrows? You're going to want to start to see, you have to break above this, find this support, maybe something like that. Okay? I don't think the market is truly done going higher with the way we are and where we are in the cycle. I've been talking and had these fib levels in for quite some time. And this is where it goes back to you're never going to know the timing. That's why you need to watch some moving averages and see where we are. But we did get our first warning sign with the fact that we broke the 20. We never broke the 20. And look, you could see break it, hold the 50, break it, hold the 50. So are we done? No, we could continue to go higher, right? But the only thing is, we had such a good run, 20 points. And the fact that I don't think that the market's done going higher, we do need a bit of a breath to come down here, find support, right? We broke structure, we broke character, find a fair value gap somewhere in here, and then go. Do I think we're going to get down here down the road? Yeah. I just don't think it's going to be now with the way the market is. And if it is, then we have another that I'd have to start over because that is scary. I don't know exactly why that would happen. I mean, you just had the largest IPO take off. So there's a lot of liquidity coming into the market. I don't think we're at the top yet. And it goes back to this. This is now at 53. This is why you're seeing the market continue to go higher. Go back to the channels I started. Go back to the beginning of the channel when I started. I talked about this. Everybody was calling for a crash way earlier. And I was saying, the moment we get above 50, now we're getting into some liquidity into the market and the business cycle. COVID delayed a lot of things. The government shutdown delayed liquidity by 3 months. So we're now playing catch up. And this is one of the reasons why navigating this market with Bitcoin and all this stuff is a little bit more challenging because typically we bottom in October. This is showing that we're not done going down. Okay? So maybe the blow off in the market where we're going to see everything freaking take off to the moon, we might get a bigger pullback in 2026, 20. Hold on. I said something wrong. We're going to, the bottom, I think I said December of 2027. That was incorrect for Bitcoin. I meant to say December of 2026, like this October. And the reason why is the halving is coming up. So let me just double check something because now I'm concerned. Oh, no, maybe I'm right. No, I am right. Never mind. I take that back. So the Bitcoin halving, unless I'm wrong, is supposed to be in April. It's estimated to be April of 2028 because the last one was April of 2024. Okay. Now, if you're saying, well, what does that have to do with anything? If April of 2024 was the halving, right? Heat, Jan, Feb, March, April was right here. Okay. April of 24. So we went up March. Where are you? April 24. Where's April 20th? Why is my month? Okay, right here. So we got up to 66,000. Okay. Now, look at this. That was the halving. When was the bottom? Do you see where I'm going with this? So if the Bitcoin halving is in 2028 and the bottom is supposed to be December of 2027, follow me here, people. This is what I'm trying to get to. And I'm doing this off the cuff in real time. That would mean Hold on, this is April, November, so call it December, Jan, Feb, March, April. 5 months before. So that would bring us to roughly December of 2027, right? Now, here's why I've been saying something is off. And I don't know if people are calling this correctly. And I could be wrong. You're seeing more downside here, right? But here's what I see when I look at this. We have wave 1, 2, 3, 4, 5. That's wave 1. Then we have retracement that was shallow. It's wave 2. This whole thing could be wave 3. Okay, follow me here. Are we going to get this? That's where I'm stuck right now because a lot of people are saying we're in a bear market, everything's going down, it's getting killed, it's going to keep going lower. But the only part that I keep struggling with is the timeline. I truly am struggling with the timeline here. We are closer to a bottom, but typically the bottom doesn't happen for about 5 months or so prior to the halving. That's what we've seen, unless I'm wrong with that, right? Because if you were to look and go in February of 19, right, the halving was in May. So that's where I'm like, what? This is odd. And we had COVID. Um, and again, the third halving was in May. So COVID was the drop, but the halving here was in May. So up here, the bottom was before, which I don't really count COVID. So this is where, like, for me, I'm not really seeing the whole thing of the downside unless something like I don't understand. I would love your opinion. I would love if you could give me your honest view on this, but I don't. This is where I keep going back to. I think the bottom is pretty much almost in after this move to the downside, depending upon how we chop. But if the bottom is 50 or 51,000, if this is not the bottom zone, okay, this is all hypothetical too, right? If this isn't the bottom zone, that means we could go way lower. But I don't understand how, based off of the 4-year cycle, that would put us into 2028, right? So that means that the bottom should be in October, December of 27. Like, we have still this whole time. And that's where I'm struggling because I'm like, I don't know. How is it that the market, I go back to the chart, how is it that the market has made an historical high and Bitcoin's getting crushed and they're saying liquidity? Okay, well, if that's the case, liquidity is coming back into the market. So then it goes back to another thing that I'm saying is I have a feeling a lot of people are wrong on this. And if I'm right, this measure and move, depending upon price action, we could get another leg up to go make a new high. And the next high would be between 139, so 139,000 to 179,000. So if you're wondering, if I draw this in a little bit, I eliminated some things. Why are you doing this? Why isn't it popping up? I don't know. It's not popping up for me. Oh, there you go. Okay, I'm just putting them all in. If you're wondering what these lines are, guys, these are Fibonacci extensions. So what it is, I pulled from wave 1 to wave 2. Okay, so I put this whole count in. This, if you see what I see, just like Fibonacci retracements, it comes down. This shows you where these are good levels to start selling. Okay? And if you're in an uptrend, you don't need to sell, but at least you know where things will go based off of your previous cycle and price action. So you could see we hit like literally just above the 2.414 fib level, which is 122,265. Now, a lot of people are anticipating that we're going to hit the 2.618 level, which is 139.80. Now, what's very fascinating is look how shallow, because we had such a big run up, this could actually potentially be wave 4. Because if this was wave, just as an example, we had 1, 2, 3, 4, 5. It wouldn't make sense. It would have been, I mean, it could be close. It could be wave 1, 2, 3, 4, 5. And we had A, B, C correction, which would take us down to 4, which would be here. But that didn't happen. So, yeah, I struggle with this. Help me make sense of it. If you're, and I know I'm probably giving myself way more brain damage than needed because it's still way too early to call it. I just don't, I can't understand for the life of me how Bitcoin is not going to go and make a new high based on the market making new highs. That's what I don't get. And also, if you layer it to the software charts, software is also not making new highs, which they're saying Bitcoin and ETH are software. So they are correlated with the software companies, which we could see a rotation, which makes sense too. Follow me here. The summer, we could be bottoming. But I've been on this for an hour. I hope you guys have a wonderful day. Leave the comments, subscribe. Like I always say, stay disciplined, trade with intention, and God bless you all. Make it a great day.